Before we get the sophomore presentation going, we have one presentation from one of our own graduates. And also, I just wanted to cover a few things about HFTP that we have coming up. First of all, if you're not getting Future Now, go ahead and speak with Edward, our Director of Human Resources, and he'll get you on our newsletter list so that you can stay updated with what we have going on. This video recording of this meeting, just in case you want to rewatch it, or any of our old meetings, will be on Future Now. And also things like quotes, stock picks, little explanations about what we have going on. Also, I wanted to bring this to anyone who's interested in checking it out. It's going to be the national conference for HFTP called HITECH. It stands for Hospitality Industry Technology Exposition and Conference. It's in Austin, and it's going to be from June 15th to 18th. For any of our representatives that would like to go, the costs are it's going to be $150 compared to $625 for normal HFTP members.
Plus plane ticket, no?
That's it.
Yeah.
Well, yeah, of course. That's just for the conference.
Hey, you might want to talk to certain people in our department. Maybe.
Yeah, maybe.
Go to the top.
So if
As a
anyone,
student representative, maybe.
hey, anything can happen, and you know, you gotta know before you try also.
Try.
So that's a great idea. So anyone that's interested or that's going to be in Austin from the 15th through the 18th of June, get in touch with any one of us, and we'll get the ball rolling for that. Also, this is an idea that one of our own, Yassine, he's not here today, but he had a really great idea, and we finally are implementing it. So our idea was a suggestion box. If you have any ideas on basically topics that we want to go over or that you want to hear about, or whatever it is, we want to hear from you, basically what the students are interested in learning and participating in. And if we can, we'll address it in our conferences or however that works. But that's up here. Come and check it out if you're interested in adding some value to what we have going on. And also follow us on Instagram if you're not on there, just to keep up with what we have going on. It's at HFTP Future. Anything that we have going on as far as events will be posted up there. And we actually have a very exciting event that's going to be coming up on around the end of April, around April 23rd and 24th. So just stay posted with that. And without further ado, I'd like to go ahead and start this video. And that'll give a little introduction to our first speaker.
Morning, March 3rd, 2008, I was on the way to lunch that we were going to talk about, and I was meeting with somebody apparently in 1995, I was on my car, and I ended up taking my head hard enough to not go for a month, and I didn't really get any close, but I suddenly had a brain injury, but I let me sit on my paralysis, and the worst of my body was paralyzed.
Even physical therapy, where they work on many connecting brain signals to all the affected muscles on the right side.
committed to being so well, to get well, for everything that we're about. So, thank you.
Very much, yeah. As you can see in that video, it's that, life is all a matter of perspective, as I brought up in the middle at some point, that anytime you're ever upset or anything of the sort, it's all, you really break it down and bring it back to where it all began, where you were actually upset, where something actually bad happened to you, you realize it's really not so much, nothing should be able to stop you from continuing to pursue all of your goals and to achieve everything you're trying to. And even that video, it was last year, I did that probably a year ago, and so much more has happened since then. It's amazing the continued progress and the continued ability to achieve whatever you set your goals to, and that is the most important thing. So next we have our good friend Jordan over here to tell us all about the stock market. Thank you very much.
Thank you, Chris. That's really motivational for all of us, so we really appreciate you being here. My name is Jordan Hamilton. I'm the Vice President of HFTP Future Entrepreneurs. And today I'm going to be giving you a step-by-step stock market presentation. So it was just last year, I was working as a private chef. I was working just about 5 days a week, 7 to 8 hours a day. And I specifically remember feeling like I wasn't reaching my potential, my financial potential. I felt like I was limited to the amount of hours that I worked in a day, and I couldn't make anything extra. I couldn't go above that. So it kind of motivated me to get interested in the stock market. Now, growing up, my parents weren't really too much into the stock market, so they didn't teach me. Most of my friends weren't into it, and no one could really give me a step-by-step process of how to do this. So, I'm going to simply deliver the step-by-step instructions in 4 simple steps. But before I do that, I'd like to show 2 short videos that's going to be like a platform for the presentation. Alright, so that gives you a pretty good understanding of how money is transferred through the New York Stock Exchange. And here's one more video that's going to help you understand exactly what a stock represents for a company.
A stock is a share of ownership of a company. As the owner of stock, the stockholder, you have a claim on the company's assets and earnings. Suppose you starting a company. I saw us. He needs $100,000 to put his one borrow from the bank. Consider he invests $10,000 of his own money and finds 9 other investors who are willing to invest $10,000 each. In return, he gives each investor a certificate that represents 10% of his company. Each certificate represents 10% of the company's assets, including finance and maintenance duties, and 10% of any future earnings. After 1 year, the company is doing well, and the company's total value increases to $200,000. This means each share of the company is now worth $20,000. $200,000 divided by 10 years. That's twice the original $10,000. The original investors can sell their stock in the company to other investors who own 100% profit. This is how stocks work. Stocks are bought and sold daily on major exchanges.
Alright, so I hope that gives you a better understanding of exactly what the New York Stock Exchange is. There's a few more key terms I'd like to go over before getting into the 4 steps. The first one is volatility. Volatility is what allows you to make money in the stock market. And what it is exactly is the price per share of a stock that goes up and down. It's not a stock that's down at $20 that's going to raise to $80 by the end of the week. It's the fluctuation between a price range more like $124 to $135. That's exactly how you make money pretty much off of the stock market. So I'm going to get into the 4 steps. The first one being choosing a trading platform. There's a million trading platforms that you can choose from. You've probably heard of Scottrade, E-Trade, Thinkorswim, Amerisave. You might have heard them all, I don't know. But from my personal experience the past year of investing, I've chosen Thinkorswim, and that's actually on the outlines right in front of you guys. Thinkorswim, in my opinion, is a user-friendly, comprehensible trading platform that will allow every single trade that you place to be through it. And that goes to the New York Stock Exchange. Pretty much it's a really easy way for you to understand what the heck's going on with your money that's been invested. Now,
How much do they charge per transaction? You know?
It's $10 per transaction, per trade.
Okay.
So what Thinkorswim allows you to do, which is why I chose it, is something called paper trading. This is a realistic way for you to test your trading abilities with up-to-date stock prices without using your own capital. That's what I've been doing for the past year, and it's done tremendous things for me, and it's giving me the confidence I need. So when I put $7,000, $10,000, $15,000 of my own money, I know that I'm going to have a lot better chance of making returns off of that. So again, the trading platform is called Thinkorswim, and it's on the outlines in front of all of you guys. Alright, so now that we have a trading platform, let's talk about the sign-up process. On the sheets there's a URL, that's what you're going to go to when you go home and to sign up, but I've actually pulled it up, it's right here, this is what it looks like. So it says, do you have an existing TD Ameritrade account? You're going to go ahead and click no. And what it's going to pull up is a quick sign-up sheet. And the requirements are your name, your street address, you have to create a user ID, you know, some of the basic sign-up requirements. And what they're going to do is they're going to send you an email within 3 minutes, and they're going to confirm your account. So when you download the Thinkorswim app, which is on every iPhone, every Android, every iPad, any electronic device you have, it's called Thinkorswim, and it's a specific app. Once you confirm your user ID and password, it's going to be very easy for you to log in and start to get the hang of things. So you have your trading platform, you know exactly how to go through this sign-up process, so you pretty much have no excuses now. My third step is going to show you exactly how to execute your first trade from opening the application. This is going to be just about 10 minutes, and we're going to bring it up on all the screens. I'm not kidding. All right. So, it's my first time using one. All right, so here's your iPad, you're at home. Here's the app right here, if you can see Thinkorswim, it looks like this. Go ahead and click that. I created an account, like I said, a year ago, but I created a new one for this experience so you would know what it looks like right when you open it. So here you see username, password, and just the beginning steps. So you're gonna, whatever username you chose, you're gonna type in right here at the top. Password goes right below. Don't copy my password. Alright, so we're just logging in. That's what it should look like. Alright, so here it is. Here's the main interface. And this is your Thinkorswim account. And this is how you're going to place all your trades. Alright, so let's see here. This is what the main interface looks like. In the top right-hand corner, you can see a search symbol. Does anyone have any specific stocks that they're interested in?
Coca-Cola.
I was going to say that.
Coca-Cola.
Coca-Cola.
All right.
I think.
So we're going to click this right here.
I'm an owner. Okay. Pretty good.
Alright, you can either type the abbreviation for the stock or the full name of the company. So we're going to go Coca-Cola right here. Alright, so here's your favorite stock. This one's Coca-Cola. And this right here shows a chart of what exactly the numbers have been doing. This chart represents the dollar amount of the stock that goes up and goes down. So for example, when you click the screen, it has a 1-day standpoint. This is what Coca-Cola has done today, since 9:30 this morning. You can do 3 months. So Coca-Cola has gone down quite a bit.
No,
I'm sorry, Pablo.
they're still.
Yeah, I know.
No, he just bought it yesterday.
You guys are too healthy.
You bought it yesterday, but you bought it again.
No, I bought it 2 years ago, so I'm still okay.
All right, here's the 1-year standpoint and 5 years. So in a 5-year standpoint, it's looking a little bit better.
It's better.
All right. So what you're going to do from this point is, well, first off, you see this green number right here? This is the market value per share of Coca-Cola, right? So $40.76. You're going to go ahead and click, you have a buy or sell option right now. This is your portfolio on this side, and we have nothing in our portfolio. So we're going to go ahead and buy this stock right now. $40.76. All right. So once you hit buy, there's a couple things you need to understand. This is how you select between buy and sell once you have that option. So we want to buy. This is the quantity of shares. So if it trades for $40.76 a share, times that by 100, and your cost of your trade is right down here, right around $4,000. But let's say you have a little bit less money to do. You can actually input the exact number that you want. So for one share, it'd be $50.76. So I hope that's pretty easy for you guys to understand. And let's see, the bottom. All right, so once you've chosen all this, always do GTC, good till canceled. That's what I do. It doesn't matter too much. Your trade is going to be executed probably within 10 or 15 minutes, maybe even shorter. So just good till canceled is the smartest option, and paper trade. Oops.
And you can also put a low price and then extend it, no?
Exactly.
Exactly.
Like he said, if let's say you wanted it for less, and you thought throughout the day, maybe you're in school, you can't check it all day, that you want to set it for $35 per share, right? So you go ahead and paper trade. This is just a confirmation. So we're buying 100 shares at 35 each. And I doubt it's going to go through within the next 10 minutes because that's not the market value for it, like I explained. So, it could be a couple hours or until that stock drops back down. All right. So we're going to paper trade. You hear a little clang sound, and there it is. Right now it's working. It's pending. It's going to happen probably within the near future. Right, so that's exactly how you buy your first stock. Now, in the left-hand corner, we see our portfolio, right?
You have a question here?
Yeah.
I saw to buy just one share it costs $50. They put a $10 per trade cost on it.
Exactly.
Okay.
When you buy these shares, most people buy usually about 100 because you need some volume to make money. If you're risking $50, you can't expect to make like 100% on that, right? So something smarter would be to buy probably 100 shares for right around $4,000, and then that $10 is very minuscule. Right. It's only really influential when you're buying one share.
Do they allow you option of investing into like a money market accounts? They have that option if you want to take the money out, because you could use that to save some money and then.
Exactly. I'm going to get into that. This is the paper trading account, and this looks exactly like the real account you're going to start when you put your own capital into it, but it's going to work the exact same way. And so yeah, let's see what else. So here's your portfolio over here. We own 100 shares of Coca-Cola. Well, not yet, but we will. And let's say it goes up to $60, right? It's trading at $60 by next Wednesday. We're going to hit the sell button. Same process, but just make sure it says sell here. All right, let's say it's $60 and we want to sell 100 of them. So we're gonna make a little bit of money, and you pay per trade, same thing. And that's how you exit a trade. So you can now do the exact same thing for any other stocks. Let's say you're interested in Amazon. Same deal, here's their chart. The market share for one stock of Amazon is $370, and you buy and sell it the exact same way. And that's what you're gonna do when you're trading on your own. All right. So now you know exactly how to execute your first trade. And I'm willing to help you, any of you, with any questions you might have. I put a card on every single piece of paper in here, so you can call me directly or email me. I'd be happy to help you out in any way. And I don't charge yet. All right, now step 4. How do I make any money with this? You're probably wondering. You probably have, just like me, 10 stocks off the top of your head that you know of. Amazon, Apple, you know the basics. But having a stock portfolio is more than that. You're gonna need options. So my idea of a perfect morning, wake up around 8:30, turn on CNBC. I think it's channel 212 on Dish. And there's a show called Squawk of the Street. And it's pretty much like Fox News for stocks. Everything going through this is telling you, hey, the market's going up with Berkshire Hathaway, or it's going down with Amazon, or it's going to give you a whole bunch of new companies you didn't even know about. And it's going to be very easy for you to update your portfolio with watching that and keeping up with the news and things like that. Also, Forbes.com is a really good source for understanding how companies are working. Like the video I showed, when a company starts to increase its revenues, like Joe's Pies or whatever the example was, that means that the stock price is increasing of the company. So if you bought lower, you're going to make money as it increases. So a great example of that would be, I'm sure you've all heard of Apple Watch. It's coming out pretty soon. So you're going to look at Apple. Apple today, by the way, is $124.88. Once the Apple Watch is starting to be sold, what's going to happen? They're going to start generating revenue. The company is going to up the revenue, and Apple's prices are going to raise. So that's how you make money. Also, Amazon, they're starting to do delivery drones. It hasn't started yet, but the UPS or the guy's out, and they're going to drop off packages on your front doorstep within the near future. I think they quoted something like 2025 or I don't know when the heck it's going to happen, but thinking like that, thinking in the future is how you make money with this type of thing. So let me talk a little bit more about volatility. Like I explained, volatility is the only way that you make money in the stock market. Today, Apple stock is $124.88, and on your sheets you see a key term that says stock range. That's when the stock goes from $124 to around $135, or whatever price range it may be in. This is just Apple's example. A stock range, well, I would say that Apple is a safe company because they have a bunch of revenues coming through their company, and you know that it's not going to go from $124 to $60 overnight because it's such a strong company and has such a strong foundation. So, yeah.
Question. So when it comes to the pricing of the stock, who determines the price on it? Is it based on revenue, or is it based on what the market or what the people are willing to pay for?
No, it's based on what the company is currently making, and it's like it's within the company that predicts that price.
The market, you.
Okay, just
Bad news, good news. Somebody important dies. So there's a new war.
iPhone 6 goes down.
Yeah, exactly. iPhone 6 bombs.
okay.
Yeah.
So
The market.
Okay, so the market is the one that determines the value.
Exactly.
So they were talking last week, remember when the German wings plane crashed?
Yeah.
The German plane? They said that the value of Lufthansa so much went down. So, it is.
All right. So, like I was explaining, the range of a stock is how you make the money. So I know that Apple's not going to drop, as I explained, but I know it's going to go up and I know it's going to go down, just like the charts that we looked at on the iPad. So I typically buy the stocks that I want to invest in early in the week. Monday, Tuesday morning, Wednesday morning. And I typically like to sell on Thursday or Friday because I see the stocks go back down on Monday. So I hope this is making sense to you guys, but with any company, let's say it's Amazon, it's going to go up, it's going to go down, it's going to go up, it's going to go down. But hopefully it won't go drastically down. And that's the importance of investing in companies that are well established rather than penny stocks or something along those lines, because you've probably heard like get rich quick schemes and things like that with penny stocks who are trading for 10 cents a share, but 98% of the time those companies are not going to go up. I'm sure most of you have seen Wolf of Wall Street, and there's a scene where he's explaining to his wife why rich people don't invest in penny stocks, because they're smart. So pretty much stick with the bigger companies that are on CNBC, the news, those type of things. Those are going to be your safest bet as an investor.
Do you go crazy, like, because you're watching the news and the danger, I mean, I'm talking about myself, or what not to do, is do you buy a lot of different stocks? I mean, like, this is what I want. I mean, and you hear the news, every day is there different news.
Yep.
Or you concentrate on certain number of companies, which you can change over time.
Yeah.
But what is your portfolio now? I mean, numbers of companies.
Personally, I'll invest in 2 new stocks every single morning.
But then you also discard something that you decide.
Yeah, if I'm up on a stock, for instance, let's say that I bought Apple at 124, and let's say it's 133, somewhere around here. I'm starting to get worried that it could drop again. I pull out, I sell the stock, and I make that capital go straight into my account, and that way, I can't lose any more money, I can't make any more money, and I pretty much leave it at that. I have my specific stocks that I go to every week, like Apple is one of them, for example, or I keep saying Amazon and Apple, but those are just examples. So, let's see. Oh yeah, so when you open your stock, you've probably seen the stock app on your iPhones, and you see them all, they're all red and negative, and you're like, wow, the stock market's probably doing horrible today. That's the best news investor could have, because that means that the prices are low. You buy low, you sell high. That's pretty much the whole point of this thing. So I strongly recommend that all of you do the CNBC thing in the morning. And something that I have not covered, at 9:30 a.m., that's when the beginning bell rings. That's when the markets start, and that's when things start trading. On CNBC, you're going to see it. They have a live camera in the New York Stock Exchange. It's kind of a cool process to watch happen. So it starts at 9:30 a.m. and it ends at 4:30 p.m. every single day. So after 4:30, you're done. You can't place any more trades. You're out. So you got to wait for the next day. Now let's talk about sitting on stocks. Let's say I own a stock for like 2 weeks and I'm not thinking about it too much. My opinion with that would be, if it's up, take your money out. And don't let it go forever, because I've had like $5,000 to $10,000 in one stock that I just let go, like Alibaba, for example, which is doing horrible now. And I lost like $4,000. It's crazy, just because I left it in there and I stopped thinking about it. I would recommend, when you're invested with your own capital, don't forget about your portfolio. Don't forget about your stocks, because you're going to open it up one day and be really upset or really happy, but 75% of the time, probably really unhappy. So,
You have a question, but
Yeah.
before, let me interrupt something else that you probably watch this program also on CNBC. The guy with the goatee, the crazy guy. Kramer. Yeah. One thing, and he has a point. One of the best things to do is when they have the quarterly financial statements and they have the CEO of the companies making a presentation. He says that now the good thing is that before you have to be a major stock owner to go to these meetings. Now by law, SEC regulation, that has to be available to everyone. So they are making these presentations. You can go to the company's website, go to the YouTube, and then you can also see where the company is planning to go. I mean, what the CEO is telling the company and the investors. So it's very useful.
Could you tell us about that opportunity that we have being FIU students? Isn't there something in the library where we have access to financial?
You have the Mergent Online. Mergent Online is a service you pay for it, you register. Next time we can try to do one like
We're
to check.
signed up for that, right?
Yeah,
So-
you go into the electronic resources for business, and then you look for one that is mergent online. That one is not only, you can do the same thing, what you're doing here, looking at the company, you can do a KO for Coca-Cola, and then you can see the financial statements, you can see the competition, you can see a lot of the financial ratios done for you. Stuff that you might want to do yourself sometimes, they have already made it for you.
And if you weren't a student, it'd be thousands of dollars.
Oh, yeah, to pay
It'd
for
be
that.
thousands of dollars to
Yeah.
get that information.
Yeah.
And the fact that we have access to that is really cool. So I'm gonna get that step by step from Pablo, put it in our next email, so all of you can have access to that. All right. Yeah.
Yep.
How do you get a more established stock to pay you dividends?
Say that again.
Dividends. How do you get a more established stock to pay you dividends?
Really, I would say looking for the market trends, future products coming out, like the watches or whatever. Look for future products in a company that hasn't been released yet. That's going to boost the revenue and boost dividends and boost the stock price as well.
But you have sometimes companies, they are good companies. Apple doesn't pay a lot of dividends. So what are you looking in Apple? Or Berkshire Hathaway, okay? Warren Buffett doesn't pay dividends. So what is in there for you? Like I said, the appreciation in the price of the stock. So you can decide, you as a person, if you take a lot of risk, if you're crazy, if you're dumb, and conservative. So a person like me, I'm older, I should probably start looking more for bonds, for interest, perhaps not. Stocks that are safe, that are paying you a lot of dividends. You will go through some recessions and depressions and boom times before you need the money in the future probably. So you might be more aggressive. You might want a company that is growing, perhaps is paying less dividends. Now you want safe companies that pay dividends, then the Coca-Colas, the General Electrics, major companies, yeah, they will pay.
Yeah.
Would you say that companies that are smaller, just starting, those are the ones that are usually paying less in dividends than the ones that are well established?
Probably because they're beginning,
Okay.
and they're reinvesting in the
Yeah, they
company.
reinvest in the company rather than.
So let's do a quick recap. The first step was choosing a trading platform, which you all have done. It's called Think or Swim. The second is the sign-up process, which I took you step by step through, and you have that exact URL on your outlines in front of you. The third step is how to execute your first trade, and I took you step by step of how to buy, search, and sell a stock for its market price. So you know all of those three. The fourth step, how to make money with this kind of thing. CNBC, some of the things I explained with volatility are exactly how you make money with this. So you have the 4 steps. So I would urge you to all take control of your finances, whether you have a lot of capital right now in your bank account or not. This is absolutely, it's free, and it's one of the best things that you could do for yourself at this moment. Because later down the road, you're going to have a ton of money just sitting in your bank. And as I learned in Pablo's class, $1 today is worth a lot less than $1 tomorrow. So it's not.
You got the other way now. $1 today is worth more.
$1 today is worth more than $1 tomorrow, because inflation, a lot of things are happening that decrease the amount of money you have. So if you made $1 million and you let it sit in the bank, there's chances are you're going to lose about $50,000 on that every year that you let it sit. And you earn about 2% keeping your money in a bank. So it's pretty stupid. You're just losing money all the time, and then you have taxes and all your expenses, and it's just a huge whirlwind. So I encourage everyone to go home today and sign up with this today, because I think it's one of the most important things that you could do for yourself at this moment. So I'm going to do another Q&A. If you have any questions, anything at all that you'd like to know, I'd like to hear it, and I'll be happy to answer those questions.
Before I leave, because I told you I was going to leave, 2 things. Something that we might do in the future, before I leave, 2 things that we might want to look in the future. We might want to prepare it. We can check. Bond investing might not be good. Might be very conservative, but it might be good to present, and it might help in the finance class a lot. Bond investing, more conservative approach. Another one, this is wild and crazy. I do not recommend it. You might want to check. Forex, foreign exchange. Have you done that?
I've experienced with forex trading,
Boom.
which is currency trading, like
Yes.
trading the euro, the yen, things like that. And from my experience, I've only lost money with that because it's a horrible time for Europe and a lot of those other countries with currencies. The US dollar is somewhat dropping, so I would not invest.
We might want to research and we do something together for presentation.
I'd be happy to.
And then there is a website, a platform, Forex, similar to St. Louis Swim or Soccer Trade, whatever. They allow you to have like a monopoly money, meaning you get like a $25,000 fake money, and you invest on those $25,000. You play, so it's like playing with Monopoly, and it's basically, as you said, it's eight basic currencies. It's not like buying pesos or reales or whatever. It's the major currency: dollar, euro, pound, etc. Like he said, you can make a lot of money. You can also lose your life. Okay, and it's the biggest market in the world is Forex, but it's wild and crazy. There are no regulations. So that one, and then for the next meeting, we also need to talk to give them start talking about the HFTP, the training in the summer. Remember, the last time is before I go to China.
Yeah.
So the next meeting, when we talk, whatever we do, let's do a session, even informal, for the training. So we have an idea of what we're gonna do.
All right, and just so you guys know, I forgot to mention this, but on the Thinkorswim platform, you start out with $200,000 of monopoly or the fake money, like he kind of explained. So you're gonna have $200,000 to literally play with, and you're not gonna risk any financials. So understand that. Do you have any other questions concerning the app? Stocks? No. Paper money is referring to capital that you haven't invested $1 in, and it's you can call it a game, monopoly money, whatever you want, but it gives you real-time prices. So when you invest your own money, it will be a lot easier for you. You won't have to go through a broker. You're going to save a ton of money. So
this one doesn't allow you to have like a fake money account. So you
it does.
also
Paper
have
trading.
that's good.
Yeah.
Can you go over floating shares and what do you behind that?
Floating shares. Can you explain a little bit more?
I mean, like, I don't know too much about it, so I asked you, but like, I thought that like the company has a certain amount of shares, and the more amount of shares they have like floating around, I guess.
Means, I think I know what you mean. Like what the amount of floating shares is basically the amount of shares left over in the company that the company allows the public to invest in. That's what floating shares is. Just the amount of shares of like any large corporation has that's available out to the public.
Exactly. So if there's no more questions, yeah.
What would you, us as students usually, attend these meetings, most of us don't have the type of capital to invest in like blue chip stock, like for example Apple or anything crazy like that. What would you suggest is a good price point for novice investors to start in that? Is that? And in the stock market, like you're talking about Wall Street's a fugazi. You never know. You never know what company is going to be safer than the other because a fire can happen or anything like that. But what would you recommend is like a good price point to start with the stock?
I would look for price points right around $80. I wouldn't invest in a stock really any lower than $80. I think that that represents a financially strong company, and it has the ability to increase and decrease in a more consistent way than a smaller company where their charts might be going like this, and you could be losing a substantial amount.
And how long do you usually keep on average? Do you keep your stocks in?
I like to start and execute my trades within no longer than 4 days. Yeah.
So over the course of the last year, can you speak a bit about the returns that you've seen?
Yeah.
Like just learning, after the first few months, 6 months, or
Yeah, definitely. So I started out doing really small trades, making maybe like $100, $150, small amounts. But then I realized I was trading with $200,000 with this app. And it allowed me to invest a ton of capital in specific stocks that I knew were going up because I was watching the news, watching specific things. So I've made over $7,000 in a couple of hours with this app, just through that alone. I'll invest a ton of money in one stock and watch it rise up. But if I invest a ton of money, you're not going to leave it overnight. It's going to happen in a couple of hours, and you're going to be out because as the charts go, it starts in the morning. It starts at its lowest. it rises around 1 or 2 o'clock, it starts to go back down. And then it might go up just a little bit. But within a couple of hours is when you should pull out if you're using a ton of money. So does that answer your question?
Yeah.
All right, so I'm gonna have John back up, and we're gonna get this thing rolling. So thank you for listening.
All right, thanks everyone for staying for the whole presentation. There was a lot of great information. I know I'm gonna go play on my iPad with Flipper Swing tonight, and hopefully, I mean, it's perfect timing because tax season, right?
Yeah.
So we're gonna have a few G's in our pockets to jump into the stock market with. So now we're gonna be concluding the conference, but I'm gonna leave this here in case anyone wants to check out what high tech is about. It has some pictures, the whole venue's on there, and just the whole 3-day event. There's like a bunch of different like workshops and things for executives in our industry, and it's basically a great networking opportunity as well. So
If we go, do we get to hang out with you the whole time?
I'm not gonna be there, but I wish. I wish. I mean, who knows? If I make a lot of money with the stock exchange, I might just, you know, just go ahead and hop on
Yeah,
there.
that adds a whole different ball. Yeah.
I'm just
More
gonna-
incentive to it, all right.
I'll leave it up here. And also the suggestion box, we want to hear, you know, what you guys want us to discuss in our future conferences. You know, definitely if it's appropriate and fits with our concepts, we'll include it. And that'll be it.
I'm gonna pass it around or? Something topic maybe interesting that I want to talk about. Is this for real? This is what you want to
do.